Good morning. We got some diehards in the room this morning. I tell you, the cash markets around the globe are closed. Most of the European and Asian markets will be closed cash-wise on Monday, too. Today's E-mini contract, CME equity indexes will trade till 8:15 Central Time. The financials will trade till 10:15 Central Time. The cash markets are closed. So we're in a situation where the normal volatility might be exceeded today. I looked at the overnight volumes when I took them this morning a little after 5. We've just traded just about 10,000 contracts in the E-mini and right at 14 in the note. And so here we find ourselves awaiting news. And again, the lack of liquidity today could probably make if this number is well off the mark, our normal, a point in the note, 2 points in the bond, not even, I mean, it be gone in a blink of an eye. So this will be a good learning experience to see what the markets can actually do given the lack of liquidity around the globe. Now, what this means is that the adjustment for the United States in the cash markets will come on Monday, and they'll set the stage for the adjustment in the cash markets around the globe, because most of the globe's exchanges will be closed on Monday, too, in, I guess, the celebration of Easter. So here we are, down to a Newsday trade. Now, just looking at where structurally we're going to have pretty good resistance in this 12 to 16 area in a normal situation. And support-wise, we probably have this 28, 24, 28 area as support. But like I said, I have no idea. I know that we plan on 20 to 24 ticks, sometimes a point, as a fade order when the news hits on a normal day. I don't have any idea where that's going to be. So non-farm payrolls 247. That number's been firm. It hasn't changed all week. Unemployment, that's the one that's easy. All these numbers are easy to mess with. Hourly earnings plus 0.2. And the average work week 34.6. It's hard to see that any of these numbers can change, it's hard to see how they can be this big given what's going on in the oil patch. If this number is a bust, it'll be blamed on the weather, and the Fed will be able to do what they're going to do next month. I mean, we're going to have a great booming second quarter. That's not what we're seeing in the numbers. Retail sales are off. People are saving more than they're spending. They're not borrowing to spend. People are still working off their debt. And when you look at how long it takes to work off debt without declaring bankruptcy, for most organizations, you're talking probably about 7 years to rebuild your balance sheet. For most individuals, 3 to maybe 7 years to get your debt back the way that you want it, if you can do it without losing your home, without declaring bankruptcy. So none of these numbers, especially the unemployment numbers, really add up when you look at the underlying macro statistics. So it's just, a newsday trade. Normally right now we would be we'd be trying to sell 7s to 11s and then 15s to 19s. On the buy side, the 2901 to 29, let it go a little. It's a B. Let it go a little bit lower. And we're going to get some buffering from the knob spreaders liquidating the 30-year and buying back their shorts in the 10, and then 21 to 25. So we're going to do the exercise. It's worthwhile, but understand these numbers really don't mean a hell of a lot because of the news. So why bother? It's practice. It takes your eyes to the right places on the charts. It helps build a foundation. Want to look at the markets the same way every day. Want to look at all the markets the same way, and then through this, you will build, really an intelligence that will operate beneath the surface. So you'll just see something and you won't know exactly why, but you just know that it doesn't look right or it doesn't feel right. And that will help your trading too. Looking at the ZB, which is still screwed up for me. I have to wipe that one out. I end up with trades on it hadn't happened since the first day on the E-mini, but on the ZB I end up with some trades there that I don't know how I've worked them in or how I did it. I know I did it because they're there, but I took guess I had a position on overnight, which has screwed up the accounting ever since, so the bond account is still messed up. Okay, this market got hit really, really hard yesterday, over 2 points if you looked at the overnight session high. So a lot of bad news has been built in. I mean, right now, if you're going to take a position in front of news, you'd be long because of all this selling that we saw yesterday. I know, are you crazy, Charlie? But you gotta think about how markets are made and who the participants are. And what we see right here is that after a 2-point sell-off, somebody's actually willing to pick up and make a market in the 64.12 area, be long and short. So, whatever the number is, the market has corrected 2 points. It was really, really strong before that. And here we sit. And that's that stray dog I was talking about. I have no idea where that one came from yesterday, but ignorance is bliss, right? So if I were looking at this market right now, I've got an M period high at 21, I've got a K period high at 26, and I've got an I period high at 31. So this 20 to the buck area would be where resistance would be. So giving it a little bit of room, a 23, 27 sell, and then picking up where we rejected price, 31.03 would be sell too. And obviously we got to get through 20 to get there. On the buy side, the last rotate down before the market started its way up was in the 64.02 area. That's kind of a way. So 5 to 1, picking up this area right in here. Would be one buy, and then our 25 to 21 coming down and picking up this area right in here would be buy 2. But remember, we're working the exercise right now. We're not recommending. I mean, these numbers really are kind of meaningless with the potential lack of liquidity that we're going to look at today. I don't remember seeing volumes this low even over Christmas to New Year's. So gold is closed. Crude oil is closed. The E-mini is open. And the euro is open, so we'll look at the euro. I believe it's open. When I looked at it this morning, it showed trades. So here's, again, looks like they might be trading off the idea that the numbers are going to come in a little lower than forecast, but it's hard to say. I mean, there just isn't a hell of a lot of volume to work with here. So no comments on gold, no comments on crude. This 30 to 40 area, the high is 40, Got a little volume here at 30. We got a high at 46. We're close, so we'll make 50 plus or minus, sell 1. And then back to our 75 for sell 2. On the buy side, 109 plus or minus. And again, the spike off this could water your eyes, but in normal situations, if we didn't have this big news, this would be where we would be trying to enter the market and buy 2 at 75. I understand, Chuck. You have a great weekend, and again, you might want to watch the news spike just for educational purposes to see how big it can be. It's there's so much of what trading is that you got to see every potential news situation, the impact of that news, and that's really why it takes 3 to 5 years to really kind of get this under your belt. Is just living through various news events in the markets. So enjoy yourself this weekend. Hope the weather cooperates. Now, to the E-mini. Normally we 10 points away is where we enter the market on a news day. That may not be enough today. I mean, it's just going to be very, very quiet. So let's just kind of go back and look at the structure. Where might resistance be? We have 65, yesterday's high. We've got this M over here at 70. And then we have this other high up here at 75, 76. So this is where, potential resistance is. So 65 to 75. And we're at 61 right now. So normally we put a fade sell at 71. And a fade buy at 51, but that won't be the case today. So if we were walking in, getting stops above the overnight session high, we'd be trying to sell 64, 66 on the idea that they would get stops right here. And on the buy side, we're right where volume is, so this low volume number at 55 would be where we'd be trying to put our first buys. So this would be buy 1, buy 2, sell 1, and sell 2. And that's the way it would be. Know the news and you have the trade. Reviewing, it was really interesting. Obama yesterday goes into the Rose Garden and touts all these wonderful things from this treaty. France has been an open revolt, hasn't said anything openly after it. And in Tehran, the lead negotiator for Iran is there saying this is bull. None of this is what this guy is saying in the Rose Garden is true. We didn't agree to any of this stuff. So there really isn't a deal out there. And what Obama has done, he's abrogated his duties and responsibilities by turning this over to the UN. And what the hell? You got Putin and China who have been backing Iran at the council. You think the UN's going to be able to do anything? So Iran's going to get all the sanctions lifted for doing nothing, which is what they wanted. And the work will continue. They've lied on everything. They've cut the inspectors short. We have to announce 30 days in advance from the early reading of the news when we'll be coming and what we'll be looking at. I mean, come on. And for what? Why would anybody put their country and the world in this kind of jeopardy? I mean, it's absolutely nuts, but it's where we are. So, here we have a guy that's up there in front of the world that will say anything. He'll outright lie to make a point, and he'll wash everything to the that doesn't go his way. And that's where we are these days. So yesterday's deal, no matter what the major news services tell you, who are in his back pocket. And why are they in his back pocket? I mean, if they have any kind of core, it's their business, it's their livelihood. They can't get access to his minions nor him without towing the line. So it's a mess. And here we go. So we'll have news in 26 minutes. We'll be back after that. The stock market will trade 45 minutes past that news. We'll trade, an hour and 45 minutes past that news in the financials. And we'll see what we have. Be back with you for the news.